Hello, and welcome to the Motor Trade Radio podcast, powered by Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the car retailing sector, from factory to forecourt.
Well, I suspect that it may be a little bit cooler when people are listening to this podcast on Saturday, Curtis. It did forecast that it was cooling down a little bit, which might give people a bit of...
We're actually recording this pretty much at the height of the heat wave, aren't we? So by the weekend, things should be cooler, especially up north by looks of things.
Yeah, we've been out some good weather. I think talking to someone this week in Scotland, they've had a reasonably good hot weekend as well. So yeah, everybody's quite enjoying this bit of a heat wave at the midpoint or towards the end of May. So yeah, nice that
it's good. It's all good for convertible sales, though, isn't it?
Yeah, there'll be more of that next week from my BBC expose on convertibles. But yes, there's been a lot of convertibles about, but we'll talk about that a little bit more next week. Yes, on my experience with the BBC breakfast team.
Yes, well, I look forward to seeing you on the sofa on Friday morning or whatever.
Blink, you might see a snippet, but there'll be hopefully more online and on the radio as well with Theo Leggett. So I got to meet Theo Leggett and have a good chat with Theo, who's the transport correspondent for the BBC. But but we have got a few shout outs this week, haven't we? We've got a busy show for you this week. We've got a few extracts to play you, as well as this week's top tip.
Yeah, and we have got quite a few headlines. I mean, pulling the headlines together this week, it was another case of what on earth do we leave out? So lots of big stories to cover, but we'll start with, I mean, as it's the last headlines podcast of the month, it means we're joined in the second half by industry guru Ian Godbold for May's top tip, which this month looks at maximising marketing efficiency by joining some of those dots between servicing and sales. Something, funnily enough, I was banging on about last week.
Yes, yeah, quite timely that. And to about timely, we do have we ran this week a 2 standalone episodes on Wednesday. Motors rebranded to Cazoo, so we managed to find time to catch up with Cazoo's CEO Barry Judge and newly promoted CMO Lucy Tugby to talk about what the rebrand will mean for dealers and car buyers. And we'll have an extract from that chat with Barry and Lucy shortly as well.
But to get things underway, as it's the end of the month, we also have an extract from our trade values episode with Brego's Rupert Pontin, highlighting some of the key used car market trends. So before we look at the week's headlines, here's a flavour of what's covered in that episode.
Rupert, can you sum up some of the key trade value trends covered in this month's full interview episode?
Yes, of course, Philip. I think first thing to mention is that from a sales perspective, sales at this point in the month are 3.5% lower than they were in the previous month. But when we look at what's been going on in terms of the trade values, we've seen during the course of the month an increase of 0.9% in the average trade price of a vehicle. Now that varies depending on how you slice the data, but I think the key points to highlight are that we saw a particular drop month on month for SUV medium, which was a bit of a surprise of 4.9%. When you look at it from a fuel type perspective, I think one of the high points is that we saw an increase month on month of 4.2%, which I think is a valuable piece of insight to bear in mind. And then when you look at it from the point of view of what's happened by age of vehicle, that's ranged between a difference of 2.2% downwards for sub 1-year-old vehicles to an increase of 2.4% for 5-year-old vehicles. So ranging in between there, but quite an interesting view of what's been going on with trade values, and quite positive, to be honest.
And I mean, you also touch on areas such as the best sellers in the month of May that's been selling the fastest. A little bit of sort of talk about the EV marketplace, and obviously you can't have a conversation about the UK automotive sector without talking about Chinese new entrants.
Yeah, quite right. So, yeah, there's an interesting section to cover off on around fastest selling cars. And we look at what's sold quickest at sort of 1-year-old, 3-year-old, and 5-year-old. And I won't spoil that for people that want to listen to the whole production. But that's interesting. Of course, what's going on with the Chinese marketplace, we've seen an increase again in the volume of new car vehicles. But from the point of view of total listings share of the market, Chinese brands took 3.25% of used car listings, and there's a long piece of research you can do in the background about which brands were quicker than others. But there's a lot going on in that marketplace. The Chinese, new entrants into the market, the rate of sale significantly increasing. It's a busy marketplace at the moment.
Yeah, thank you. I mean, as always, a lot to unpack, a lot of devil in the detail, and a lot of analysis to try and understand what is happening.
Yes, very much so.
Well, I mean, that was a little bit of an overview from Rupert and myself as to what to expect from that full interview from earlier on in the week on your podcast feed from the monthly trade market chat with Rupert from Brego there, wasn't it, Curtis?
Yeah, definitely. And it is worth checking out the full episode because he does go into some detail on trade value trends over the course of the month, and obviously covering some of the topics he mentioned there, and some really fascinating insight into Chinese brands as he alluded to there. So do catch the full episode.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
Headlines this week come from AM, Car Dealer, Motor Trade News, and the Financial Times, starting with the latest NFDA survey shows dealer concerns over profitability and EV targets. While Leapmotor did so well in the NFDA survey, it now expects to partner with dealers outside of the Stellantis networks. Used EV prices in the UK have declined at the sharpest rate of any European country this year, according to some new data. Then in the second half, we'll look at Dick Lovett's full year results show a minimum impact from Jaguar's suspended new car sales. And we'll close this week's episode with two notable marketing initiatives. The first one is Arnold Clark celebrating the opening of its first showroom in Wales by offering a car for sale for just £1. And we reveal which Chinese new entrant brand has launched an 8-year warranty package. But first up is that extract from our interview with Barry Judge and Lucy Tugby talking about this week's rebranding of Motors to Cazoo.
I mean, obviously, we've talked a few times about the rebrand, and Motors acquired the Cazoo brand back in June of 2024 and repositioned itself as a marketplace in April 2025. And as we're talking from today, which is Wednesday the 27th of May, the Motors business has been rebranded as Cazoo. I mean, can you talk us through what drove the change and what it will mean to car buyers and dealers?
Yeah, I can answer here. So when we set out on this journey to become an alternative marketplace for dealers in the UK, we asked ourselves, some honest questions, some hard questions around what would stop us and what do we actually need in order to have an impact. And the answer kind of started with people and culture. We came out of eBay ownership. We exited with a very kind of corporate mindset in place, and that just wasn't going to cut it. We needed to redesign the culture from the ground up to be more founder driven, to be a bit more fearless, a bit more dynamic. So that cultural shift is something that's really powered everything you see today. Now, the brand itself, I think it's important to be clear, this is not simply, it has never been about simply slapping the Cazoo logo on the Motors website. We are consolidating our entire dealer business under the Cazoo brand, and new Cazoo technology. So we'll be transitioning all traffic from Motors to Cazoo, and then later in 2026, the Motors website and platform will be sunset. And I think the reason is straightforward. Cazoo already has, I think, over 60% consumer awareness. It's a top 5 automotive brand in the UK and number 2 marketplace in terms of brand awareness and consideration by some distance. So building that level of recognition for Motors from where it's at right now would have cost us tens of millions and taken many years. So that the brand equity gap made Cazoo as a destination the obvious choice for us. And the timing feels right. The market is shifting. Dealers have been telling us for a long time that they need a creditable alternative. If you look at what's happening in the wider market, and I think Auto Trader's full year results last Thursday, it's clear that that incumbent is navigating a difficult period. Dealer numbers under pressure, growth slowing, and that's creating a window for a challenger brand with genuine momentum to step into. So and we intend to be that brand. So for consumers, to go back to your question, for consumers, they won't notice a dramatic change, right? We've been ramping up Cazoo marketing, and Cazoo as a destination for over a year, and the awareness and consideration numbers have been climbing steadily. For dealers, there's no action required on their part. They continue listing their vehicles as they have done in the past, and we have managed all like the redirects and the technology in place behind the scenes to make sure that their transition is seamless and unfelt.
I think clearly, Curtis, that really gives a good detailed rationale why they've gone with the Cazoo brand, and that it isn't just a rename, that there's a lot of technology changes and stuff going on in the background, and some of the rationales to in terms of that lead generation. So hopefully the dealers listening to us today get to understand why the Cazoo brand is the chosen brand out of the two. That it is about driving traffic, it's about that consumer recognition, but actually it's going to be backed up by a lot of technological work and advancement from the Cazoo business.
Yeah, definitely. And it really does shed light on what's been going on behind the scenes over the last 12 months or so. And they within the interview, Barry and Lucy do actually share some of their current and future plans. So do check out the full episode, because it's all very timely now that Motors has become Cazoo, and they're now in a position to actually talk about what's next.
Yes, very much so, very much so. So we'll head over to the headlines, and as Curtis outlined at the start, we're going over to AM Online and the NFDA initially, because the NFDA survey is out and it shows that dealer concerns over profitability and EV targets. Now, obviously, that it starts off with Lexus has topped the latest National Franchise Dealer Association Dealer Attitude Survey, whilst dealers continue to raise concerns over profitability and their ability to meet the electric vehicle sales targets, obviously related to the ZEV mandate as we approach the half-year stage.
Yeah, the NFDA, so National Franchise Dealers Association, this is the dealer attitude survey that's published twice a year, and it's a very influential and widely read piece of research across the industry. And this year's survey had responses from 2,511 dealerships, so pretty good response rate across 34 franchise networks, with an overall manufacturer satisfaction score of 6.9 out of 10. And that was actually up 0.3 points from the last survey, which was summer last year. As you say, Lexus was the overall winner in terms of satisfaction, the sort of satisfaction that dealers have with the brands they represent, scoring 9.3. So that was ahead of Mercedes-Benz on 9.2. and Kia on 9.1. And that top three tends to be pretty much the same between the surveys. There might be one of those brands that goes up, one goes down, but the top three is pretty consistent. At the other end of the table, Seat recorded the lowest score of 3.4, followed by Audi at 4.2 and Nissan at 4.3.
And interestingly, on our chat with Rupert Pontin from Brego this week, we talked about obviously the new challenges. Now, it is cited in the story, and we'll get to the top 10 shortly, but the newer and emerging brands also perform strongly in the rankings, with a Motor scoring 8.8 and Leapmotor, and we'll talk about that in a bit, achieving 8.7, whereas Land Rover and Suzuki both scored 8.5 or higher. So, I think generally, the early adoption of these new brands seems to be playing off, and that the dealers are quite liking it. And there is a comment in the story from Sue Robinson, who everybody should know, that is the chief executive of the NFDA, said that the results pointed to improving dealer sentiments after weaker results in the previous editions of the survey. That the Winter 2026 Dealer Attitude Survey shows a general positive turnaround in dealer sentiment, with majority of metrics showing a marked improvement over the scores implied in the Summer 2025 edition. And that as Curtis said earlier, the national average manufacturer's rating increased by plus 0.03, 0.3 points to 6.9 out of 10, and showing a stabilizing trend across the network. So, I mean, all in all, it's a pretty overall positive result, and there's always got to be some losers, though, unfortunately.
Yeah, definitely. And we will put a link to the survey because it's freely available on the NFDA website, and it is very detailed. But I think the chart that everyone goes to is the last one, which is the OEM rankings. So, how would you rate your manufacturer partner overall on a scale of 1 to 10? So we can give you the top 10, which is, in fact, just bubbling under, as they used to say on the charts, outside the top 10. We've got BMW at number 11, MG at number 12, and Volvo at number 13. But looking specifically at the top 10, number 10, Toyota, number 9, Skoda, number 8, Mini, number 7, Suzuki, number 6, Land Rover, number 5, Leapmotor, number 4, Omoda, and the top 3 again, Kia number 3, Mercedes-Benz number 2, and Lexus number 1. So pretty interesting there that we've got 2 new entrants there in the top 10 already, with Leapmotor and Omoda, and not only are they in the top 10, they're in the top 5.
Yes, great performance there. And as Curtis said, we'll put a link to the full survey in Monday's newsletter, so you can check that out. And as we mentioned, we talked about Leapmotor there, and the story in AM Online this week is that Leapmotor targets partners outside the Stellantis brand after strong NFDA debut. So, as I say, Leapmotor is looking to expand beyond the Stellantis affiliated dealership groups to support its ambition to become a mainstream EV brand in the UK market, after securing a top 5 finish in its maiden appearance in the NFDA Winter Dealer Attitude Survey that we were just talking about.
Yeah, and Leapmotor, it really has come from nowhere. I remember 12 months ago, maybe 18 months ago, us talking about this new brand joint venture between Leapmotor and Stellantis would be launched in the UK and across Europe, only available through the Stellantis network. But to date, it's got 79 retailers in just over 12 months. And the strong showing in the NFDA survey has prompted Managing Director Damien Daly to say that when launching a new brand, having the right retail partners behind you is critical. So we're pleased that for our first NFDA survey, we've already leaped, and I suppose he couldn't stop himself, could he? We've already leaped to 5th position overall. And he goes on to say that over the past 12 months, we've grown from 40 retailers to what will be more than double that number by the end of June. And to have achieved this result, especially with taking the number 1 spot for frequency of introduction of new models, is massively encouraging. And it goes on to say that all of our retail partners today have existing relationships with Stellantis, which was our priority. But, and this is the key, we now want to look beyond. And given that how highly we score on profitability, we expect more will take the leap with us. He's done it again.
You got to do, haven't you? I mean, that's good too. No, I mean, it is great, and there has been an investor day recently from Stellantis over in the US, and it's created a lot of activity, a lot of conversation across the global automotive of these changes within that Stellantis brand. But as you say there, I mean, phenomenal performance, and I think we've spoken to a few dealers, haven't we, on the podcast that are doing really well with the Leap brand within some of their Stellantis network, particularly with next to Vauxhall there. And I think, they obviously quite quickly recognize that actually, we can stand a lot outside of our partnership with Stellantis as a standalone brand. So, yeah, I think it's great. And, they are obviously very clear, talking about affordable EV strategies. And that's the brand's retail proposition. Sends a singly, highly specified trim level across the range with pricing positioned aggressively against established arrivals. So it seems to be working from the now with that feedback from the dealer network.
Yeah, definitely. And staying with EVs and new entrant brands, heading over to the Financial Times, the headline there is Britain's EV boom hits second-hand bump in the road. So this is it's well worth checking out this full story. It's very detailed. It ran early in the week from the FT, and it's based on a lot of research that's been provided to them by Indicator. And the story actually tracks how used EV prices in the UK have declined at the sharpest rate in Europe this year. And that's despite a boom in new EV sales sparked by rising fuel costs as a result of the Middle East war, which is something that's been sort of widely commented and picked up on across the industry. And the piece goes on to say that industry executives warn that the influx of EVs from Chinese brands and the UK government's ultra-ambitious sales targets under the ZEV mandate will make it even harder for banks and leasing companies to forecast the RVs of electric vehicles, a key measure for customers securing finance to buy a car. And the piece then goes on to say that as from the beginning of April, the RVs of 3-year-old electric cars in the UK was 38% of their original list price. And that compares with other markets with 46% for Germany, Spain and France. And the residual value of petrol vehicles was 45% and 51% for plug-in hybrids in the UK. So really showing that RV value relative to those other European markets.
Yeah, and I can vouch for this in conversations right across the sector. I know David Bestley's quoted in the story alongside Andy Shields there from who's acting as a consultant on behalf of with Indicator there. But I think generally, we are seeing a lot of pressure and uncertainty. And you and I talk about every week, don't we, of what these Chinese manufacturers will do on residual values in the future, and where does that sit from a risk perspective, and things like that. So I think it's a fascinating story here of really what is happening in the UK against other markets. Is this, as you quite rightly say, this ambitious, particularly this year with that 34% for cars and is it 24% for LCV? I could be wrong with that one. But it's such an ambitious target, isn't it, as to, what will this do long-term impact on financial stability for those holding the assets in the main?
Yeah, definitely. And just to round off this story, it does actually point out that Chinese brands were not necessarily the worst performers in terms of electric vehicle RVs in the UK. And again, as from beginning of April, BYD electric vehicles residual value was 39.8%, which means it lost 60% against its original list price. But that actually compares with 32% for MG, obviously another Chinese brand, but 37% for Ford and 34% for Peugeot, again, according to the indicator data. So they're not in isolation there. This is across the board now. But we'll be back with the rest of the week's headlines in the second half after this.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Cazoo. Next up is car retailing industry guru Aion Godbold, sharing his top tips on how to steer your business to success.
Well, what a glorious week of sunshine and perfect timing for another hot tip. We're now at the very end of May and heading into the final month of Q2, which makes this a crucial period for dealers to assess performance, pipeline and stock strategy. By now, tactical registrations and pre-reg activity should largely be complete. If you're still carrying aging tactical stock, then decisive and aggressive action is needed to clear those units and strengthen your position ahead of any additional pre-reg activity that may need to take place at the end of June. Now, I'm fortunate to work closely with some of the most progressive and agile automotive businesses across the UK and Europe. And one area where I consistently see outstanding best practice is around service to sales opportunities. This is an area that continues to be hugely underutilized across the industry, despite the fact that these are existing customers already engaging with your business and physically visiting your dealership. Some of the best performing dealer groups are creating highly effective service to sales processes. They are using personalized video communication exceptionally well, particularly within some of the newer Chinese brands entering the market. Customers are receiving tailored videos explaining features on newer models, highlighting upgrade opportunities and creating genuine engagement rather than just another generic sales message. I'm also seeing dealerships successfully booking test drives while customers wait for their vehicle in service. It sounds simple, but it's incredibly effective. The customer is already on site, already engaged with the brand, and often has time available while their vehicle is being worked on. Most importantly, these businesses are identifying customers sitting in positive equity positions and proactively building opportunities around them. In many cases, there are deals to be done with minimal impact to the customer's monthly payment, or sometimes even improving their position altogether. Service to sales really is low-hanging fruit. These customers already trust your business. They already know your after-sales team. The hard work of acquiring a customer has already been done. Yet it still amazes me how often this channel is overlooked, not just operationally, but also from a marketing perspective as well. Too many dealers continue to focus solely on external lead generation while underestimating the value within their existing customer database and daily service diary. As we head into the final month of Q2, now is the perfect time to review your service to sales process. Number 1, how many opportunities are being identified? 2, how quickly are they being followed up? 3, are personalized videos being used effectively? 4, is the sales team working closely with after sales? And lastly, are you actively targeting positive equity customers? Small improvements in these areas can generate significant results very quickly. If you want more hot tips, insights from across the automotive industry, or simply want to chat about all things automotive, feel free to get in touch with me at Aion Godbold at igcdigital.co.uk or connect with me on LinkedIn. Now enjoy the sunshine, stay focused, and have a strong finish to Q2.
Well, talk about timely. I mean, that really does resonate with me. As you may recall, Phil,
Yeah.
I was in a dealership last week,
And no
and
one talked to you.
sorry,
And no one talked to you.
yeah, totally ignored. So I went in to get my car serviced. I wandered around the showroom and the forecourt, and not one salesperson came over to ask me if I needed any assistance. So joining those dots, I mean, it's so obvious, it's so easy, but as Ian points out, it's a missed opportunity for so many businesses.
Yeah, definitely. I think he must have listened to the podcast when you mentioned it. But and he also did. I'm not sure whether it was intentional or unintentional, but he's changed his top tip to a hot tip in this warm weather. So it must have been feeling the heat there, Ian, and very aptly went into the hot tips for it. But always useful, and I mean you get so much in a very short snippet of Ian's time there. But as he said, do reach out to him if you think he can help you and your business in what he's been talking about. But we'll get back to the headlines and we'll head over to Car Dealer and a brief story on some financials. And this is that car dealer Dick Lovett sees profits hold firm despite Jaguar, Mini and Porsche struggles, saying that Dick Lovett published its annual accounts for 2025. The firm reports pre-tax profit of 10.59 million despite a fall in turnover, and that the car dealership hit by removal of new Jaguar sales and Mini switch to agency model. So I mean, this is for their financials, and this is probably, there's not many out at the minute for full year trading for 2025, but this is till the end of December, 31st December 2025, isn't it?
Yeah, and it does get a bit confusing, doesn't it? Because some of the year ends we've been talking about over the last couple of weeks have been year ends for the previous year. But yeah, as you say, this is year ending December 2025. And yeah, some really impressive results here, especially with a lack of new Jaguar car sales. And as you say, Mini switch to agency. So Dick Lovett seemed to be sort of riding and navigating through that, and delivered really impressive results because, as you say, pre-tax profits of 10.59 million, and while the figures represent a slight decline on the previous year's 10.61, bosses at Dick Lovett remain pleased with how the firm handled these tricky market conditions.
Yeah, and they say, they do cite that they've maintained profitability despite a significant drop in turnover, and that was sparked in part by not being able to sell any new Jaguars throughout the year. Citing about obviously the shrinking Porsche sales and Mini decision to adopt an agency sales model, also contributed to that drop in turnover to 801.22 million compared to the 2024 turnover figures of 810.49 million. So, quite a big drop in turnover there, but, maintain that profitability.
Yeah, and as an aside, I did notice in the NFDA survey that Jaguar wasn't actually listed, so I'm only assuming that Jaguar dealers were not asked what they thought of the brand this year. Maybe once those new sales start up again, they'll be included again. But yeah, some really good positive results there from Dick Lovett.
Definitely. And heading back to Chinese manufacturers and Aion, who we've recently had on the podcast with John Wakefield, didn't we? As the OEM specials puts the Great 8 after sales package at the heart of their retail strategy, saying that the Aion UK believes that its Great 8 after sales package could become major differentiator in its increasing crowded new car market, with network development director Duncan Johnson describing the program as central to both its retail and residual value strategy.
Yeah, it's this is a really good marketing initiative, I think. So that's 8 years covers the warranty, roadside assistance, servicing and MOT cover, and will be offered across its entire model range. And as Lee Giddings, the fleet director, points out, it's not a launch campaign, it's a brand promise. So the idea evolved as really Aion looked at for ways to stand out from a growing number of new market entrants. And they go on to say, we were looking at how we differentiate in a very crowded market. This 8-year warranty was great, but warranty alone wasn't enough. Then it expanded into this whole concept of, if this has 8 years warranty, why can't it be 8 years roadside assistance as well? So they will stand out. This will be a differentiator. And it does kind of remind me of many years ago when Kia was the first brand to launch a 7-year warranty, and it instantly stood out from the crowd as a result of that. It was a big gamble, and I do remember those conversations with Kia at the time, but oh boy, did it pay off for them. And this could be this could really benefit Aion as they establish themselves in the UK.
Yeah, and they do talk about, they are deliberately taking a measured approach to network expansion, and it's prepares to open its first 15 retail sites by the end of June, the half-year point. They're looking to do 100,000 units in 2 years' time, and that they've got relatively steady growth curve, so retailers can grow with them. So I think it seems to be a great strategy. And as you say, coming in with that 8-year warranty plus the other items that are involved with that really gives that confidence, gives that network confidence and that after sales confidence, which is obviously what a lot of the dealers are looking for as well with these new entrant brands.
Yeah, there'll be a lot of other new entrant brands and possibly some legacy brands sort of running through the figures and seeing what they can come up with to compete with that. But a bold move. And we'll finish with another marketing move, which really caught our attention this week. And it's from Motor Trade News. And the headline there is, Arnold Clark to sell car for £1 to celebrate Cardiff dealer opening. So this is Arnold Clark expanding into Wales for the first time. So obviously a mainstay of the Scottish market, operating in some English counties as well. But this is the first site in Wales, in Cardiff. So to celebrate the opening of this first Welsh dealership, they've come up with this initiative to offer a car for sale for £1. What did you make of this one?
I think it's a great initiative, and Arnold Clark's are pretty good at this kind of thing from my experience with Arnold Clark's over the years. I mean, obviously now, they moved down out at Scotland, came down that sort of M1, M6 corridors as we know, and continue to grow. But yeah, I think it's a great initiative. And I remember the old marketing days when I used to be involved with motor retail, and we were selling cars at a consignment cost plus £1. So you'd use your consignment price and then £1 on top of it, which is what you would sell the car to the consumer, and that's going back a couple of decades, should I say, Curtis? But no, I think it's it is great initiative, and I think we had Robert Forrest to deal with, talking about his marketing initiatives and doing things a little bit differently. And now these guys are thinking, how can we do something a little bit different? How can we stimulate activity? And as you said there, the first entrance into that Welsh marketplace, how can we, hit the market? How can we really sort of get the consumers on our brand and our business?
Yeah, and just to clarify what they're offering, so you can't just turn up and buy a car for £1. So anyone interested, and it's a great way to generate footfall, this, because clues about the one specific car that will be offered for £1 are being shared on social media, and its identity will be kept a secret until it's purchased. And Arnold Clark is inviting customers to visit its Cardiff dealership to try and find the car using these clues. And the site stocks around 150 used cars in addition to its Motor and Jayco new car range. So again, a great way to get customers into your dealership, on your forecourt, and doing a bit of investigative work, and it's going to pay off for one customer.
Yeah. Can you imagine what that is? How many cars you have to buy before you think you might have won the £1 one?
Yeah.
Like the lottery. Well, I think what a busy week, and as we've said throughout, do check out the full interviews. First one with Rupert Pontin from Brego, giving her an overview and a bit more of a detailed insight into what's been happening in the month of May around the retail and trade market and valuations, and obviously the great conversation and chat with both Lucy and Barry. And congratulations again, Lucy, for the well-deserved promotion. But that interview, that chat really does give that plan as to why, again, Cazoo is the leading brand, and obviously what they plan to do in the future as well. We did some of that sharing as to what to look out for in the future.
Yeah, and don't forget that all of this week's headlines will be in our newsletter, which is distributed on Monday morning through LinkedIn. So if you don't subscribe at the moment, do find Motor Trade Radio podcast on LinkedIn and subscribe to that. But that's all for now. So many thanks to you for listening to this Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Cazoo.